Welcome to this explainer. I am absolutely thrilled to have you with us today. Look, if you're the kind of focused learner who just wants the straight facts, no fluff, well, you're exactly in the right place. Today, we're setting our sights on an absolute giant in the financial space. We're going to demystify the massive, but honestly pretty tricky personal loans from Bajaj Finserv. We're using direct source material to pull back the curtain and see exactly what goes down when you hit that apply button.
Okay, let's dive right into this. Have you ever found yourself needing a personal loan, but you're just terrified of hidden fees, or sudden charges, or falling into some crazy high-interest debt trap? You are definitely not alone. It's actually the #1 reason people hesitate to use these financial tools. Our source material today takes a really critical insider's look at how these specific loans are built. And hey, the goal here isn't to scare you off. It's to arm you with exactly what you need to know to protect your wallet.
So, here's our visual roadmap for this explainer. 1. The Bajaj loan reality. 2. The flexi loan trap. 3. Eligibility and required documents. 4. The step-by-step application. And finally, number 5. The ultimate negotiation hack. All right, moving right into part 1. The Bajaj loan reality. Big limits, long terms.
So it's super important to set our expectations right out of the gate. While our interest rates are notoriously on the higher side, they kind of make up for it by offering a massive amount of flexibility and timeline options that a lot of traditional banks just don't touch. If you check out their site, you'll see advertised loan amounts starting at 40,000 rupees and going all the way up to a staggering 55 lakhs. But according to our insider source, forget about that 55 lakhs number. A much more realistic target, assuming you have an average strong profile, is right around 5 lakhs. But what truly stands out here are the repayment tenures. You aren't boxed into a tiny 2 or 3 year window. They offer terms of 84, 96, or even up to 108 months. That means you literally have up to 7 or 8 years to repay, which gives you some serious breathing room on your monthly cash flow.
Which brings us to part 2, the flexi loan trap, choosing the right loan variant. Now, with all that immense flexibility comes a really serious warning. Making the wrong choice on the very first step of your application can literally cost you tens of thousands of rupees. No joke. When you apply, you're going to be presented with 3 variants: term loan, flexi hybrid loan, and flexi dropline loan. Our source is brutally honest here. Ignore the flexi options entirely. Just stick to the term loan on the left. Why? Well, a term loan acts like a normal loan. You get consistent, normal EMIs, a totally predictable timeline, and you know exactly what your total interest payout is going to be. But over on the right, we've got those flexi loans. And guys, these are deceptive. They are designed to lure you in. Say you get a 3-year loan. Your first year's EMI might look incredibly cheap, like maybe just 2,000 rupees instead of a standard 10,000. It feels like an absolute steal, right? But after that first year, boom, it balloons. Suddenly you're paying 15,000 or even 20,000 plus a month. It's basically a horror movie jump scare for your bank account. By the end of the term, an interest payout that should have been, say, 50,000 rupees has completely skyrocketed to 70 or 80,000. So bottom line, do not fall for that low initial EMI trap.
Moving on to part 3, eligibility and required documents. Let's get your profile ready.
Before you even think about opening that application webpage, you absolutely need this magic number, a CIBIL score of 650 plus. Because you're applying for potentially heavy loan limits, having a solid credit history is just non-negotiable. If you're currently sitting below this, you're going to need to work on your credit health before hitting apply. Aside from that credit score, the prerequisites are actually pretty standard, but they're incredibly broad. The age requirement spans from 21 all the way up to 80 years old. You can be salaried, whether that's in an MNC, private or public sector, or you can be self-employed running your own business. As for KYC docs, the usual suspects apply here: Aadhaar card, PAN card, or your driving license. And for income proof, just have your salary slip or bank statement ready to go. Make sure you have all these digitized and totally accessible before you start. Okay, part 4, the step-by-step application, navigating the digital maze. All right, you've got your documents ready. Let's quickly navigate this digital maze so you know exactly what to expect step by step. It's basically 4 macro steps. First, initial details and OTP. You enter your loan amount and tenure, pick that term loan variant we talked about, and verify with the mobile OTP. Second is income verification, where they fetch your bank statements digitally to back up the salary you declared. Third, you knock out your KYC via DigiLocker using your Aadhaar. And finally, step 4, finalizing your exact bank details for where you want the funds dropped. Now, this is where it gets really interesting. Notice the psychological game they play during this application. Let's look at a sample 100,000 rupee loan. The advertised processing fee is just 756 rupees. That's a tiny 0.75%. Honestly, that's incredibly cheap. Even with a stellar credit score, a traditional bank might hit you with a 1.5% fee. So you gotta ask, how can an NBFC offer it for so cheap? Well, check out that bottom metric. They tease an 11% interest rate, but according to our insider source, landing an actual 11% personal loan here is almost impossible in reality. It's a classic bait and switch. They lure you in with a dirt cheap processing fee, fully knowing they're going to make their money back on a much higher finalized interest rate right at the end of the process.
And speaking of the end of the process, stop, I need you to pause right here. Towards the final screens, you're going to see an option for something called financial fitness. Do not check this box. Seriously, if you just blindly click yes to everything on the screen, you're going to get hit with extra, totally unnecessary charges. Make sure that box stays unchecked to protect your cash.
So what does the actual math look like on that final summary screen before you hit submit for a 1 lakh rupee loan over 24 months? Spoiler alert, you aren't getting exactly 1 lakh. After they deduct that processing fee and 100 rupee stamp duty, the actual cash dispersed to your bank will be 99,144 rupees. And your sample EMI? That'll be locked in at 4,849 rupees for those 24 months. It's absolutely crucial to understand these exact final numbers so you don't get any nasty surprises when you check your bank balance.
All right, the grand finale, part 5, the ultimate negotiation hack, flipping the script on the agents. The moment you hit submit, the real game begins. Our source dropped this ultimate insider secret, and I quote, "They want the commission. Never accept the 20% offer. Negotiate down to 15%. See, once your application goes through, you get assigned a relationship representative, and you don't even need to call them. They will aggressively call you to finalize the transfer. Why? Because they want that commission. They literally need you to take the loan so they get paid. So, as the source emphatically states, absolutely never accept their first offer.
Here's exactly how this bartering process plays out in the real world. Step 1, the agent calls and hits you with a terribly high initial rate, let's say 20%. Step 2, you push back. Hard. You demand a fair rate, maybe telling them you won't sign for anything higher than 13 or 14%. Naturally, the agent is going to tell you that's impossible. But hold your ground, because step 3, both parties will eventually settle somewhere in the middle, usually around 17 or 18%. And hey, listen to me closely on this. Do not worry that your loan is going to get rejected just because you negotiated. Actually, scratch that. They've already verified your documents, checked your credit, and approved your profile. They want to hand you this money. Negotiating just ensures that you keep thousands of extra rupees in your own pocket instead of just, handing it over and interest. So what does this all mean? When you understand how the system is built, you realize that you actually have the upper hand here. You know to avoid the flexi trap, you know to uncheck the hidden fees, and you know exactly how to negotiate the final rate. The ball is entirely in your court. So the only question left for you is, are you ready to negotiate your worth? Thank you so much for joining us on this explainer. Keep learning, stay focused, and we will catch you next time.